down your mind, slow down these days, slow down these moments. I'm slipping away. Time won't you wait for me? Time, she never waits. Oh, please wait for me. It's a river one way, gone in a moment, set in stone, but still in flow. We're only here for a while. Yeah, we're only here for a while. Yeah.
Okay, so here we are, and again, I got this thing wrong. This is actually supposed. I thought I changed some of the text already, but evidently I forgot this part here. This is day 11. Yesterday was, I'm going to say, a bit of a shameful day, and this is just, again, by the way, welcome to this. If you are wondering what all this is about, this is just me and my accountability channel. This is me trading and trying to journal what I've been doing, trying to move forward, trying to make it, trying to take on a very, very big task. And the reason that this particular project is being embarked on is because I do have I know I've got the trading skills to get to a higher level, but I've certain personality traits which make it difficult for me to achieve what I want to do, right? And what I mean by that is that I get impatient and I try to really swing for the fences way too early, and I get really, really bummed every time the losses get too big, right? And I've been trying to figure out how to stop myself from doing that, and I thought I came up with a way, but of course there are too many ways to get around it. So what I'm going to do now is actually on today's stream is again about being transparent and putting it out there and taking whatever shame needs to come with it. I'm going to take the shame. Okay, so what yesterday was all about was trying to first of all make some gains on the market, and in typical form when I was not on the stream, what I did was I took very, very large risks again. So basically, meaning that while the account yesterday was about $300 something, and the acceptable amount of risk for that would have been, I don't know, just $15-20. That's actually on the far side or big side of the risk factors. And I was out for an appointment meeting a friend. So on the way, on the phone, looking at the market and thinking, I think something is in this. And there's something about being on the phone which is I think is distorting the way I look at the market as well. I basically got in on much bigger lot sizes. Just again, the usual thing, right? And unfortunately, what happens is when you take on bigger risk and you're wrong, well, you might take some losses, and basically that's what I did. So losses have been taken, and then what I tried to do is, of course, take countermeasures, right? Which is actually just saying, okay, well, because of all the leverage that's available, to give you an idea, like the $300 over dollars, right, means that I can get access to a much larger amount in terms of margin, right? Because it's 1,000 to 1 account, and so what that meant is I went deeper. I was just pushing it deeper, and getting more, um, building up more losses, right? And then to the point where I had reached what you call it's a level where you go like it's there's not much point playing the game anymore because you can't really come back, right? So I really severely damaged the account yesterday, and so yeah, so again, because this is about confronting myself and talking about the stuff that is really difficult to talk about. um, I am going to also share what I think is a terrible bit of information. Let me see if I can find the. Oh, hang on. Where is that? Okay, here it is. It's a shameful curve, so I'm going to share it, and it's to great personal embarrassment, really. Okay. Let me see where I can find it. Yeah, okay. All right, so here it is. This is embarrassingly what yesterday and earlier today looked like. And it's the kind of thing that I need to really, um, well, figure out, beat, whatever it is. Okay, so here's what it looks like. Um, okay, so I'm gonna say good news that no one's here right now, but someone's gonna see this, I know. Okay, let's see. This is the chart, the equity curve, all right? So if I showed you this in parts, you're gonna go, in parts it's really impressive. Um, but the parts that I'm not impressed by, actually, the parts where I've really screwed the pooch, for want of any better way of saying it. So yeah, it's all this. What is really to be I think of concern is the way that I come back from these lows tends to be on sharp push pushes like this, right? That's one aspect of my trading style, which I really need to be careful about, because what I'm doing is I'm employing leverage, and um, it's producing some results. So that's something that's good. Now, what is really troubling is the result of the impatience, and I can see that by the string of losses in a row that lead ultimately, because we know when I'm taking, again, like I said, bigger risks. So every one of these points here is where a trade has happened. Because I'm taking bigger risks with the account, um, the push down tends to be steeper, right? So like right here is where big risks were taken. That's why it pushed down as hard as it did. Big risk also took it back up again, and then big risk brought it back down again. And then what we did was got to a point where the account, again, getting so small that it didn't make any more sense to try to keep trading it this way. Um, Finally, I just refinanced it, by putting in a bit more money. Um, so again, this is about just being totally transparent with everything I'm doing here, right? So I put in 100, and to be honest, lost again, and then ultimately put in 60 and fought my way back, basically like this big huge trade like this. This is one trade and moved all the way to here. And this is where I need to get a bit more frustrated with myself, because here is where, look, it's a really nice growth target. I hit 550, and what follows is actually me trying to trade some more out of the market when I should be actually going, okay, um, we're good until now. Let's see whether we can find another opportunity. And that's the problem. I'm not really doing that, and I'm pushing way too hard. So sorry, let's just have a look at that. So that last bit there is where you can hardly see it, but it's an almost vertical line. That is where the last trade was from here all the way up to us here. So we're good numbers. We actually $709, 709, and it really looks good. But this is the kind of it's a kind of P&L, kind of equity curve, which I would not trust someone else with, and that's actually a bit of a problem. Um, it's it's a failure in terms of what I was trying to do. So let's just talk a little bit. I mean, look, there's no other way to put that. So I'm going to put that down simply as that. I've failed to do it the way I'm supposed to do it, right? So I'll leave it at that. What I am looking at right now is the current situation and trying to move from there. I'm going to try to keep within the goals. I'm going to move back to this smaller setup like this so you can see what's going on. So good news, bad news. This is about being realistic about situations and realistic about money as well, right? So this looks really impressive right now, but it actually is not. What I really should be doing is I should be making a different calculation. Because I've been putting money in, and the way I should be calculating this information is actually more reflective of the amount of money that's gone in, right? So because what's happened is I financed it with the initial $100, and then there was the $60 that I added onto it, and then this past few, actually all of yesterday, basically was another day when I refinanced again, another 100 and another 100 and another 60, so it's a total of 320. It actually would make more sense if I were to calculate this number a bit differently, and it wouldn't. I don't think it's going to look as favorable as this. So 1.1, to the power 11, 285, and then times 320, because that's how much financing actually went into this. So based on that amount of money and that growth rate, I should be actually at $912, right? So that's the price, or that's what I should have been doing if I had financed it from the start with 320, which is the total amount of money that actually has gone in right now. So in terms of the growth every day of 10% on that money, this is what it should have been. It should have been 912 instead. So if you just join in, it's a bit confusing. Just rewind a bit, and you'll see why I'm at this crazy spot here. So I'm kind of thinking to myself now whether I should just take out the amount of money that I had invested in the first place and just take it out and say, okay, let's start only with that amount of money, or just take out the money that has been been put in over and above the initial $100. So that should be, I think, a fair way to assess how this progress is being done. And this is not a scorecard by any means. This is just a kind of general placement to know where I am in the grand scheme of things. Am I on target? Am I off target? Am I within range? Whatever it is. So it's also a kind of reminder to myself. What I'm trying to do is look at this and go, okay, so keeping in mind that if I had put more money into this and I was more careful and going slow, I could be outpacing this current balance right now, and that's something to be sobered up about. So it is one of those things where I really, 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 really have to think about what I want to do, how I want to do it, and what am I compromising when I break the rules, which again I seem to have done on this occasion, right? So I'm like I said, upset about it. At the same time, there's a little bit of confidence that comes from the fact that I've found the opportunity and managed to take a ride. So the big trade that actually made a difference to the account was, it was just looking at seeing what the whole structure was, and I found a few opportunities. So there were some trades that were here. Let me just get a nicer color pen that works for this. So, there was some trades that I took from here, which like went down like that. And I got this trade. And I think this big long ride here is what really made a difference today. Um, and actually what was interesting about it also was actually how I actually, I know I did now. I remember now. I actually took this ride all the way to here, up to this level here, actually. And then what I managed to do is mess it up. I actually messed it up by giving back quite a bit to the market, all in this noise here. I didn't give it all back, but I gave quite a bit of it back. And just again reminding myself that the way that happened was because I was looking for much bigger um, trade sizes as well. So that's the issue with what I was doing there. So that was the dangerous behavior that is being repeated, and it's what we're trying to do in terms of trying to get rid of it. So up here now, this is the chart that we're looking at, and this is what we're looking at in terms of the layout. This is a high that's based on the H1 levels. In terms of where the market's been going, the trend currently is still pretty much up. And again, a reminder myself is trends tend to stay in the direction that they're going, but they will respond to resistance lines, right? So these are these are areas of resistance right now. In that yellow line, you can see, almost to the T actually corresponds to where the price has responded, right, like this. And now the question is, what happens from this point? Do we take the market? Do we take take it that the market's going to push back from this point? And all we have right now is just possibility that this is what might happen. I delayed a little bit coming online, and so we missed this one, which was the trade that I would have taken from there, because that was kind of an available trade to us. I'm still a little bit confused about where I should be going sometimes, in terms of targeting a trade, right? Because what happened earlier was this market was pulling back, pulling back, pulling back like that, and then this candle popped in like this. Basically, it's a reversal back into trend. And I saw that on the 5 situation as well. And so at this point, because of trend and everything else, I should have gone in, but I just missed it. And so, once you miss it, and it's gone away. The price you're going to pay for the trade is going higher, right? As it's moving in the direction that you intend to go with the trade. So for that reason, I didn't get in there. And where I thought the trade could go is where it has gone right now, which is actually hit it hit this level, and it's not an insignificant trade. It's a little bit of money here and there. Yeah, yeah. But the question right now is about where it goes now that it has hit the level, right? So it's coming to the it's come to the top. It's now hit this really, a significant high from before. Um, it's going to be some resistance here. So even though the trend is up, we're looking for the kind of position to get into this. We don't want to be unnecessarily taking risks, right? Because what there is currently is a combination of market factors, right? So there's both people in the market right now. Okay, the big story is of course the buy, right? But the resistance is up here as well. So this is where there's a pushback like that. And because it is, a long held or a pretty big significant level, we don't know exactly where the market's going to go. We just know that this is roughly where it's going to happen, right? So this is one of those situations where we talk about just sitting on the hands. Yeah, so I'm going to repeat it just for the benefit of myself and for anybody who's joined the stream, whichever time you join the stream, right? So I got here this under shameful circumstances. Um, Basically got into trading outside the rules. Got on a bus yesterday to go and meet a friend, and while on the bus, I while I should have been playing other games, I was playing this game, the trading game, and trying to win at the trading game. Okay, because yesterday we actually managed to almost hit the 10% goal for the day in the morning before leaving. And then I was thinking, you know what, I gotta put more runs on the board. I was aiming to get to a higher level, and there's something about just trading on the mobile device. It makes me. It doesn't make me. I do it. It's a thing where I take a little bit of a higher risk, on those situations. I just think that I can achieve something really quick. So the size of the trades that I took were a bit bigger, and yeah. So the problem with that is that means that the size of the losses were also a bit bigger. And one thing I'm realizing about myself is that I'm really, really impatient, especially when I'm trying to play the game. And so when you're playing the game, you want something to happen. It needs to, it needs to, you know, it needs to be played properly, professionally, and that's what I'm trying to do with this particular exercise as well. Why I'm putting it online. So it's for myself to reflect and to prove to myself, and it's happened already twice on just after 11 days already. It's happened twice. And usually after the weekend, I realized that I overcrank it and try to hit for the fences, and I take a big hit. It's always about moving a little bit early on things. So I'm trying to do this, trying to make sure I'm not making terrible choices. So yeah. So it's why I'm going to declare it as shameful circumstances. Now the question that I have is whether or not I should just rebalance this by taking out the extra cash that was put in. Because I think that's a fairer way to assess where we are. So there's 200 by my calculation, there's $220 that was added to the account in a way which some would argue is, I think, wrong. Right? I think I can use that language. Right now, I'm just having a look and see whether I can take this trade here. This looks like a nice. Okay, not too much going on there. It's a nice small trade that may be possible here, but it's not. Doesn't look fantastic. Yeah. So no real price movement on the upside, but the momentum is up with this, and yeah, not enough in this to make it interesting, shall we say? Pullback would be here about 130 points, up here to 240 points. Yeah, so the problem is the game. It's playing the game, trying to win the game. You know, by finding finding a play where there is no play, right? And having to stop myself from being too imaginative, right? So the imagination is what is really dangerous, because it's where you go, I can see how something might happen. And so I'll just talk about that myself right now, and this is where I have to talk myself down from it, right? What is happening right now is I can see how something might happen from here, in the sense that that line that happens above there is where there's been a major line. It's a major level, right? And that's from the H1 levels. And what's happening is there's been a push down, and the push down has happened here, right? And that's the first sign of it, of being pushed away from this resistance line. And it's a line that's pushing against, basically what is quite a persistent trend. I mean, if you look at this, there's no doubt about where this market wants to go currently. So the push back it's not insignificant, not inconceivable, but it's something that I need to wait for a bit more confirmation before I take action on this, right? Because you can see there are many pushbacks that happen along the way as well that didn't really materialize in the full pushbacks, right? Like this one as well. And of course, those were not against major levels like this is. This is coming up to a major level now. So there is a little bit more credence to it. It is not a foregone conclusion until it is, right? So that's the other reminder to self as well. So there is no foregone conclusion until absolutely, it's absolutely happened. And what's interesting about this is that it's gone up and pushed up, and then there's been a bit of like a rejection here, like this, and then it's just gone back up again. It's pushing back up again. So it's hinting, strongly suggesting that there is pretty good upside to this, right? Now, the thing is, in context, when you look at it from a larger time frame perspective, we're just starting the journey here. This is just the beginning of the negotiations. We don't know. It could go right through, of course, obviously. But this looks like just the beginning of the negotiations. When you compare it to the last time the price came to this level as well, there was some toing and froing. And so it's hard to say exactly where things are going to go. That's one of the challenges, of course. There is this thing though, which I have seen many times play out, and this is basically the mirror image of a market, right? So if you look at the mirror image of this and look at the past like that, it actually bounced this way. So do I buy the story that this is going to mirror like this, right? Now, the reason why this makes any sense at all, because it seems like just like you're a nutter thinking about it this way. Why should a market have any kind of you know symmetry at all in terms of the past? It really is a lot simpler. It's all about the money. It's all about stops, right, and entries, right? So if you think about someone who has entered the market and let's say they've entered this market here, and these are the cells that they've entered in the market, right? And let's say you're the market maker. So this is your big hammer that you've thrown in there. This is the sell you've done there, right? It actually makes a lot of sense that you would come back in here to defend your position, especially if you had a long-term position or plan to go down here as a bear, right? So that is part of the reason why markets will tend to have this kind of symmetry. The other reason, of course, is just how people look at markets, right? So people are always looking to see what's a good price, what's a good price, what's a good price. So this level here has actually been, it's determined to have been a rather good price before, and this is where, the price actually changed. So in the present moment right now, if I'm more of a market maker, I'm looking for a good price for things to happen, as in what's a good level to pick off. I might look at this level and go like, yeah, this is a pretty good level. I think we can do something with this. And in terms of why symmetry might occur, it's because, well, the size of the move that happened before here, it's actually telling the story of what a market decided to do. And so if you were here now thinking, okay, what's a viable sort of push back down again if this market pushes down, you might go, okay, I could see it all the way going back all the way down to here. I could see it going all the way back down to even all the way down to here as well. And because of the based on these levels here, right? But if you were to guess on a short-term goal, this doesn't seem like a bad idea to think about, right? To consider. So that would be somewhere around here, and so that would be kind of a short-term goal, and so that would, if acted upon, probably lead to a kind of symmetry in the market as well. So we'll see what happens. Again, some of the considerations are trends tend to stay in trend, right? So there is going to be a high propensity for this to continue going. And we're watching very carefully to see what it does, right? Does it actually go? And if it goes, how far does it go? Because there is a point after which you go like, okay, I'm not going to try to trade the base or trade the bounce, because it's just not a probable thing anymore, right? So we're going to go, okay, let's see what happens. So what I'm going to try and do also is to do a little more time away from trading. I don't want to spend so much time doing it, because it's really it's really affecting the way I trade. I said like the amount of time I'm spending there is just affecting me. When I spend more time, I'm actually I think it's a sunk cost fallacy because I have so much invested in time. I'm trying to get something out of it immediately. And so I'm actually pushing myself harder than I really be should. I really be shooting. I really should. So I think I need to modify this particular aspect of it. And it's a kind of a joke, but it's actually true, right? This is a $10,000 a day job, as in like it's gonna be hard to do because I keep failing at the basic things to make it happen, and I have, in essence, kind of well, in essence, I've cheated at the game because I have brought the balance all the way down to a point where it just like and I just need to refinance it. I refinance it and then I fight back and then I win again. It's been a bit of a cheat there, so that's not, I think, great. It's not a reason to destroy the entire project because it's not about that. The project is not about achieving the goal as stated. It is about trying to stay on track as much as possible. So on the one hand, removing whatever extra money that has gone over and above the $100 at the beginning is, I think that would be fair. So what I'm gonna do is I think I'll do that. Um, it just feels really good to have this kind of figure out here, right? I mean, it's such a nice number. But no, the truth is, yeah, I think the truth is that it should be a smaller number. It should be zero. It should have been an account that blew up. That's the reality of it. And what I did was intervene, and so a little bit unfair there in terms of if I'm talking about fair play, it's not fair play. Okay, so what's happening here is we're seeing that the market is pushing. It's pushing up. At least we don't. I mean, look at for now. It's pushing past a. It's pushing past an H1 level, and we'll see if this holds. If the pullback doesn't come back too far and stays within range, it might be a possible buy as well. It's always terrible in retrospect when you look back and go like, okay, this thing I was thinking about here, like this entry here, would have turned out to be a good entry, but just didn't have enough going for it at the time for me to take it. And the loss aversion, this is a thing that is really, you know, significant is not wanting to take action, especially after you've won back. And that's something to deal with as well. Because there were many times along the way where I had made back enough money to make up for losses. Um, but I was victim to that natural thing that happens, and this is something which has actually been documented, right? For every loss, you actually have to get you have to get back more than what you've lost for you to feel good, and the factor actually seems to be about four, right? So that's really is it. So I've got to be very, very, very much in touch with that feeling, that sense of what goes on when I get a loss, because I'm trying to not just come back, I'm trying to come back and overachieve, to make up for that. So it's a thing that is to be watched carefully. And right now, what's happening and what I see happening is it's gone through the level before. Listen to the charts here. Close, it's gone through and closed above that level. So this is significant. And what I'm going to do is mark this level here as a potential level for where the market could get to, right? Because that's natural. It's the natural next stop, right? If you were a trader. So it didn't do quite the mirror image thing. It's not quite that play is not quite done yet. I mean, it's still possible. But in terms of target on the bullish side of things, this is where the next stop is going to be. And the question is whether you get to get a ride on before it goes to the next stop, or it just goes and then you sit and wait again for the next chance. If you come to this corner of the internet looking for action, high-speed action, I would recommend you try out the paint drying program, because that will be moving a bit quicker. This is the challenge with trading. It's, if done correctly, it's boring. If done correctly, it's all about just trying to figure out what the market's going to do. And here right now, what I'm doing is I'm just marking an M15 level from before. You can see that this level actually has a little bit of significance. You can see that it's the, it's the support and resistance line that has been built around these prices here. So resistance here, support here. It's not insignificant. We'll just see if it provides enough support for the the assault for the next level. Okay, I've changed the graphics slightly. I shouldn't do that. Have I? Yep, okay. So definitely an onward signal from here to go on. And then the question is whether there is going to be an opportunity to get in on that price movement. And it looks very much like it's not going to give us that. Possibilities for it to come back down from a double top, maybe. If it does that, maybe we can do that. The price always looks like it's going to go and disappear, and not give any take any prisoners. But what happens frequently is this: you get a previous level like that, which is technically a previous high, and then you get this sell off from the same level as well, and that's probably going to lead to a little bit of a pullback, which may lead to this. Crazier me would have been inclined to join the sell. I am just going to watch. Or will I? This is a very natural setup for a pullback before continuation up like that. And the temptation right now is to trade the pullback as well, as in like to trade the sell, just because just because it's looking like it. But why not is the lows are still on the way up. So in terms of the trend, the trend hasn't come back down on the 1 minute scale at all. And it may not actually form a trend as it pushes down like that. So for reference, this is the H1 line, right? That's where that line of support comes from. And then that next line above that, this is actually an H1, an M15 high from before. So that's where the levels could and might go to, especially if they push through. And currently I'm reading this as a pullback. And the question is, how big a position do you take on this? Okay. Two would mean, see how this goes. 500. So that's 50. We've actually also come to a point where you're going to go with much larger, what do you call it? Lot sizes than before. So we started off, with 0.1, 0.2, and now with the balance where it is, the lot size should go up as well correspondingly. That's how the compounding happens. So yeah, I've been as transparent as possible about what's been happening so far. So even though at the start of this stream, there was nothing or no one actually to talk to directly, but I just put it down as well to talk about what happened. I think it's for myself, I need to document it so I know what I'm doing. And for you, if you're following as well, it might be something for you to consider on your personal story about how you do things. It's again not advice to trade. This is not even about education. It's just about me trying to be more accountable and where necessary, scolding myself in public. And this session began with that. Not a great, really not a great example of what a professional trading day looks like. So yesterday was regrettable, is regrettable because of what I did and how I did it. But it's not so massive and terrible that it calls for the end of the project. But am I'm both relieved as well as disappointed, if you can imagine that. And I think your trading journey, should you be starting on one right now or you've been on one for a while, you'll know what I mean about that feeling of both being disappointed as well as relieved. Um, it's something you can do a lot less if you do things much more in line with the correct way of doing things. So I have to say that is something to look at. challenge always is to go whether that's worth anything or not. And this is all it's a 1 minute chart, so not always good to listen to what the 1 minute chart's telling you, because it's not that it doesn't tell you the truth. It's just that it's a minority. It's kind of a minority report, right? It is very small price movement relative to the big picture. So it's not a majority, sort of saying what's happening in the market and what's going to happen and what you should do next and that kind of thing. And every now and then, it does tell you the truth, and you go like, I should have done that. But for the most part, and most times, it yeah, it's not as significant a voice as should be, as sometimes we make it out to be. So on this occasion there, that little signal for the entry would have been something to consider, but I missed it. And honestly, it just was not enough confidence in that moment to go, I want some of that. So we'll see what forms out. If this pushes up significantly, it'll be interesting. If it gets pushed back significantly at this level, it's going to be interesting as well. Only because, it's like the top of that price for now. It gets pushed down. There's a possibility of a slight move down. And even then, a move down that we shouldn't maybe consider. We'll see. If it gets pushed down really hard, which doesn't seem to be the case right now. There you go. This is the irritating no man's land when you don't know exactly what to make of it. And I'm always reminded that it's gangland, right? Because at the 1 minute chart, it's the lonely streets. It's in the middle of nowhere between levels. You know, do you hang out, or do you take any kind of advice from the candles in this 1 minute chart thing? So the idea that my mentor's been trying to instill in me is that these are all the gangster types right now. If you think about it as a metaphor, um, and if you place yourself, you do business where the gangsters are, you're likely to get yourself into some trouble, right? So that's the thinking that we're applying here as well as we look at this. An upward trend that still seems to be in play. Is it despite the pushback? That it's definitely still an upward trend. So we're looking for maybe a position to get in here that is viable. It's a quick little pushback, maybe. So an interesting price pattern to look at as well is this push up that went all the way like this, goes up like that, and then the sellers come in to push it down all the way. Here it goes up again, and the sellers come in to push it down all the way. It's like from high up there and pushing down as well. So perhaps what we should look at is possibility of a sell that's coming out of this. Again, only because it's gone all the way up. I mean, not all the way up, but it went all the way up here like this, and then there was a sell down, push down. So what I'm doing is I'm willing to take a small position here. Yeah. Let me see. Well, it hasn't pushed all the way down, so maybe not quite. But yeah, the temptation was to get involved here with a sell. Only because of this push up like that and then the push back down. That means it went all the way up. And then, the sellers reached up and grabbed it and pulled it down if you like. Let me see what that looks like. 360. So the duality of this is actually what needs to be addressed, right? The ability, the fact that you can actually get some success from breaking the rules, and again, it's to do with swinging with the luck as well. So the market is going to do what it does. You position yourself in the right way, and you kind of take advantage of it. Like for today, for instance, if we look at what the market's doing, right now it's still trending, still pushing up. Whether or not it's gonna push back, turn back, just to do a little bit of a like a retrace. We can't tell for sure, but it's something that does happen all the time. Market gets pushed like that. Like this is going a bit steep as well. It usually winds up with it pulling back before it goes off that way. And what we're going to try to do is not get caught in a buying frenzy, like what looks like a a trap on the upside before they just use you as liquidity to sell out. This looks a little bit like something like that's happening right now. Okay. Okay. And the other thing is, sitting on your hands, deciding that you can't move until a move's fully made, and then we can take action on whatever evidence is in, right? Instead of just jumping in too early. So this is all very tantalizing stuff because the trend very much is in. The price is coming back to a resistance or level from before. Now it will be a level of support most likely. And so it might be a position to actually do a buy from. And that looks a little bit like it's on the nose to possibly take a position for a buy. And it will be a small trade just because I don't want to take too much of a risk on this. So that's $19 already. It might be enough. Might be too much. I don't know. This is it. Let's see. Is it pushing hard? No. Come on. Okay. This is my cheeky little trade here. And this is just me just going for the trade pushing on up, but it may still come on down a bit more. The only reason I have any kind of confidence at all in this trade currently is this line here, the big line, the yellow line it's bouncing up against. That is a line from it's an H1 level, so it's a significant level. It's kind of a granddaddy level from before, and it went from resistance. It's likely to go. It's likely to change into a level of what do you call support. Let's see, 22.9. They're gonna stay. Come on. Technically, what I should be doing is giving it a bit more room. Usually, we should leave about 30, like that. Do that. Ugh. 30 points, to be fair. Of course, if it's looking like it really isn't working out, we'll just get out, but and we're not going to be too ambitious. We just want to get maybe that out of the trade. It's a lot of money. But just to be mindful as well, that was for, a significant risk. I mean, that's it's not nothing to risk $30, $40, right? I mean, that was how much money was on the table just now, and $40 as a proportion of the balance right now. It's not a bad thing. And I'm trying to remember the old rule, right? Which is basically is protect the money. It's always protect the money. You're always trying to protect the money, and you do that by taking smaller risks. So small enough risks. Initial trade, initial risk $29. That was it's okay. So we're always just going to be looking to see what happens as well. So it's not just getting into the trade, but we want to see what happens after we're in. Oops, sorry. I seem to have made a mistake. Not a mistake on the trading here, but Just keeping a watch to see what happens, whether there's going to be a pullback. Because at any time, any moment, right, there's the possibility of what the market may wind up doing and showing you, right? So currently, a pretty reasonable story that the market's still moving up, and then there's a bit of a pullback and still going to continue like that. It's not too bad. But also a possible story is a story of a reversal. So head and shoulders kind of thing up to here. It's come down low and it's come out here like this. It could come down again. And so that would be a nice pattern for a reversal, really, right? The head and shoulders dropping. So we're just positioned in the market right now to see where it goes. Be really good now because we have a buy for it to go and meet our target all the way there. But at the same time, just to not be too bummed out if it doesn't, and then we have to take our profits early here, for instance. And then if we take our profits and we're wrong anyway, and it goes up, gotta try to get used to the idea of being grateful because you won, right? It's one of those things. It's just really, it's actually a good thing to win. But in trading, what happens is many times you win and you go like, ah, man, I should have just stayed in there. I could have had more. We could have done this, could have done that. And it is a battle of, it's a battle with yourself to try to prevent yourself to prevent yourself from acting ungratefully, because there are actually so many things that could happen, in trade, and you could be very, very successful with the trade if you just held on to it. I'm sorry, if you just held on to it. So if you just got happy with what you got, right? If you win something, it's already a win, and I think that's the thing that's the challenge to sometimes remember. So this is what I'm going to try to manage right now, how I handle this. Okay. So what's going to happen now is what I have now is targeted this price, and we'll see what happens at that price. It's very likely, very, very likely the price is just going to bounce back at the time, because what it is it corresponds to a high, a previous high that's not just H1 highs, but also H15, so M15. So lots of reason for this price to hold, right? So we don't want to necessarily stress it out too much. Don't abuse the relationship, as it were. Take a look at that. That is essentially what I've got. There are two targets set at two extremes of prices. This can go here, pretty sure. It's just this thing about the trend. The trend is likely to keep going. And you can make a lot of money in trading just by waiting for those breakouts or those trends when they start, when the market starts to trend, and you just ride the trend all the way. I've seen it happen. Where when you ride the trend, you can 20x your account in just a day, right? That's the kind of thing that can happen. I don't know if we'll have that kind of a day today, though. Only because it's a day that I haven't been spending the entire day, you know, focused in and doing it the way it's supposed to be done. There was lots of potential today in terms of the way the market moved. Lots of opportunity to enter and develop. And what I'm working on myself is how to get better at catching all those rides like that. Like when you see there's a trend forming and it's really pushing through, how do you, you know, how do you get in well on those trades? Just to look at the patterns along the way, because it is not always very clear when the opportunity to enter a trade is. And the entry is always about getting in and being positioned well, because you're on the backswing of it. The pullback's always a good time to get in. So it always looks like, in retrospect, when you look at something like this, you go like, oh, I should have got in, should I got in? I should have got in maybe here. I should have got in maybe here. Should have got in here, and the reality is whether or not you can get in there, as in like if you're trying to get in there based on anything else, okay, there are two kinds of people who are going to get in the price like that. One is the lucky people who just happen to get it, right? And you have the market makers. So the market makers are the ones who start the move in the first place. They are the ones who put in the price. They are the ones who actually cause the movement in the market. So this extreme level here, for instance, where the price looks like this, right? So it comes down to here. Now, for the price to come down to here and then shoot back up and push up like that, it's the market makers actually who will do that. It's the market coming in to support and buy it up, right? So the people who are going to get this price, usually, like I said, it's just going to be the people who actually make the market, or the people who caught the falling knife and were just lucky. You catch the falling knife and you think, oh, this is it, and you know what? It's your lucky day, because the market makers come in and they actually grab hold and they pull the market up. So if you get in there, you know, if anyone shows you trades like that and says, I knew exactly where the market was gonna go, it's more likely than not they're pulling a fast one on you, because it's really very difficult to figure out this level without some kind of insider information. And there's just very little to go on here. Very little reason for it to have happened. The nearest possible thing was the price came down to a nice quarter number. So 33.25, 33.25, 33.50, 33.75. Those are going to be those nice quarter numbers. And so if you're targeting prices, I could target quarter price, 33.50. Let's see what that terrain looks like. 33.50. No, it's too far. Okay, right there. Wow. It's right on the edge of that price. That's where the price went to before it dropped down. So 33.50 could be a very interesting price. It's more likely to be the price that we've marked out here, which is not 33.50, but this level here, which is 33.48. But the potential to stretch all the way to that price, that's what's kind of exciting about this. But yeah, the other thing to kind of watch for when you're trading is if it's getting exciting, probably not a good time to be doing crazy things. If something is pushing the market, moving it, and the question sometimes people have is the market being manipulated? And the short answer is yes, right? And by whom? Well, it's people who have an interest in the result being, going for them. If you're a buyer, you want it to if you're a bull, right, you want the price to go up. If you are, a bear, you want the price to come down. So I just go and take the I want to grab take a quick moment to go and open the door. Someone's at the door, and be right back. Here we go. Oops, let me change what's on here. There you go. Okay. This is where I wish I was around. Sometimes when a price gets like really close to your price, um, and then backs away from it, it's just time to take whatever profits were going to be given to you. We'll see how this goes. See if it goes any further. Yeah, you can see that. So as long as this pullback isn't too significant, one of the things that has happened, well, it's one of the things that has happened on this project. You see me yawn a few times if you come here in the afternoon, but I actually fell asleep on Friday night. It was it was quite embarrassing. It was a good thing one of my friends was actually watching at the time, and so they rang. But it was interesting on the chat. You know, it was noticed. Okay. So I wasn't around to see the price getting close to that level like that, and then backing away from it. But it's one of those opportunities where um and this is a bit of thinking that came from via I can't remember his name. I think it's Tom Haggard. I think I'm not sure, the trader who's on online as well. He just has this phrase that he likes to repeat very often, which is don't be a dick over a few ticks. And it's something that I am slowly coming to terms with as well, where when you get close enough to your target, and then you kind of it kind of backs away from it, you go like, okay, but that's close enough, right? And you take some of that money off the table. I mean, if it's appropriate, if it's a long stretch in terms of never coming back, that kind of price, you go like, okay. But if it's a reasonable target like this, and because the trend is still on, don't get too panicky about it. It's all right. And the other thing that I have to resist is all this adding on, because there's a temptation to go like, okay, well, I seem to be on the right direction. I'm going to add on and add on and add on and add on more trades at the same time. You'll layer on more trades, and it feels, I think, very often like the right thing to do while you're doing it. But the one thing that's very important to just keep an eye on is how much risk you are carrying every time. In the past day, as I was trading off of screen, I realized I found myself um, trying to mitigate risk by saying, okay, I have a big position now, so what I can do is add on a smaller position without too much risk. But it actually made me less able to stay in trades, as in, like, I wasn't able to pursue um, the trade because I was trying to reduce my exposure and my risk to meet that. It actually made me less competitive, if you know what I mean. Um, but I mean, let's say for instance, like there was a trade that was to put this in practical terms, if I in a situation like this right now, for instance, there's a buy and I'm in profit for $10 or $20, whatever it is, and I say, okay, I want to add on to that, and I'll add on a trade, and on one hand is good because I can then take on a trade which is already in the right direction. Um, but for that trade now to be profitable, there is a new higher entry level de facto, and if I wanted to break even on that, I'd have to move my stop losses up to that level. And by doing that, it actually makes it harder for the price to reach the target level without taking out the stop loss, right? So that's the trade-off there. I mean, it's a fair enough trade-off, but it's one of those things that hardly pays off. Or hardly seems to pay off. It's happened often enough that it's come back, taken out my stop, and then moved on, and I realized, okay, I probably would have had to take on a bit more risk. Okay. So the story still very much on trend. So still on its way and still looking like it might have a good chance of reaching that level. It's one of those things when a price pushes back from a level, and this is not fully at the level, but just before that, and what's a good sign is how it doesn't get to push back all the way. It pushes down and then it finds support and starts going up again. That's a pretty good sign about the movement in this direction in general. And after giving you that big spiel about not adding on to a trade, I want to add on to this trade. Let me see what the risk will be if I do that. It's going to be up there, 271. Hmm. Okay, I would add to it, but it's not necessary. As in, like, there's lots and lots of, you know, lots of money that can be made from the existing trades already, and I don't have to. I don't have to risk too much more. I don't think it's not gonna be worthwhile. So again, just to not be too hung up on the trade going the way I want it to, and if it doesn't go the way I want it to, just to be happy with the profits that are available, because this might pop down. It's looking a little bit like it. Let's see. So another very good thing to do to think about trading is not to go the trend is the law. Sometimes people talk about that going with the trend thing, but it really, really is important that you are working with the trend, and does not mean that it's the law. What does that mean? Um, yes, the price may be heading in the right direction, but it doesn't mean it has to, right? So that's the difference there. Law, it's not the law just because the trend is there, but it is a great influence, right? So you have to be thinking about that. So a good example of that moment would be something like this, where the trend is still up, definitely, but it isn't the law because it's coming. It can go against the trend for a bit, and it could go a lot. It depends. Very very positive sign for this turning out right. Yep, I know. The trend is your friend. It's your big burly friend with the muscles. It's quite determined to go where it wants to, but every now and then it takes a detour. So oh man. So that's the other thing about live streaming trading. It not only is it accountability for myself, to myself, as in like now I have sort of, for the trades that I take on screen, it's been a good way for me to document it. Um, I was I was just confessing earlier on about how I took some trades yesterday which were off screen. It was terrible actually because um yeah, just plumbed the depths um of depravity, just going all the way down, um very nearly blowing up the account and then coming back again, and just saying that, to be fair, what I should do is deduct the amount of money that I put back in again to get this going one more time. So on one hand, there's that, so I should take that amount of money out. On the other hand, there is also, of course, just the positive vibes, to be honest, right? If you can, part of trading is just having a sense that you're doing the right thing, knowing what you're doing, because execution with confidence, I think that's one of the, not something to be trifled with. It's actually a very valuable thing. It's just to know, okay, well, this is what we do, and to be able to move. So right now, it's trending hard today so far, getting close to a potential speed bump, and at the same time, also positioning myself just in case it goes past that speed bump. Maybe we can take a little bit more from the market as well, but we'll see. We'll watch. Oof. Hmm. Mm. So one of the big challenges for me is to get my own attention. Actually, in terms of everything else I'm doing as well, there's lots of stuff that needs my attention. Um, and yeah, there's just things that get in the way sometimes of that need for it. So I'm having to manage that part of it quite a bit. Oops, what have I done there? No, something changed. Wait, wait, wait. No, that's not supposed to happen. It's a good time to happen anyway, I guess. Bring it up. No point exposing the risk anymore. Also, to try to be grateful for whatever wins they are, right? That's the challenge. So I've been thinking about what to do on this channel in between things, because usually what I do when I'm doing my own trading and my own stuff is that I'm getting ready um, for other things, other shows and stuff and all that. And what happens a bit differently when I'm on this is I actually stop doing that. So that is not fantastic. Um, because it does mean there's a little bit of a productivity hit for me to do this. And then again, of course, fair enough, right? I mean, I'm live streaming. It shouldn't be free, as it were. Let's see. Social media. Tree file instead. Okay. Okay, so we'll go looking now. Instagram. Yeah, so I was thinking about licensing rules and what to do with this channel in between, as in, like, what do I do? Discuss podcasts, discuss other shows. I mean, I can always do things like process some of the stuff that I'm supposed to do, which is videos for my client, which is something that I can do in the background, but I don't know whether I should be playing any of that audio ahead of time. Which is fair. Okay. So I won't so I don't want to reveal what's going to come up on the show, for instance, right? Because I'm doing things like I'm producing a show for NUS for the Healthy Longevity series. And so in doing that, we actually have videos to uh, to to include in the show itself. And what I have to do is I'm responsible for editing those videos as well. Let's put that in there. So I won't show you the videos. I'll just talk about what I'm doing. And this is interesting. What's a dash video? Hmm. Okay, we'll see. Anyway, so the next webinar that they're doing is on the 4th of July. So it's a holiday in the US, but not for them here. So the show continues. Basically, every Thursday, there's an opportunity for you to pick up and learn a lot about longevity, healthy longevity. It could be for yourself, it could be for someone that you're looking after as well. And I mean, it's a little bit, I would say, there's a little bit of work involved to try and learn and be good about healthy longevity. But it's really worthwhile. I mean, I think in terms of where you could apply this is fantastic. Okay, so the spread has really widened here. So this is a little bit of action, which again should have just closed it right now because I wasn't looking at this, but looking at videos instead. Um, it may well come back up because it hasn't really pushed down and completely, closed and stuff. But it's just the widening spread was something to go like, okay, maybe we have to be careful about that. So we go back to hunting and looking for opportunities. In the meantime, an update on the total. I don't even know whether it's healthy to be looking at the total like this, but anyway. Okay, so again, lots and lots of reasons to feel good, despite the fact that we didn't quite get what we were looking for in the trade. Might there be a reversal on the cards? I don't know. The spread getting as broad as it did just now, that was kind of a thing to maybe suspect something was going to happen. What I'm going to do is I'm just going to do okay, there's no reason to it. I was going to do a sell, and on the principle that this was a hard push down and here was a hard push down again, with a little bit of risk like that, to see how much of a bounce back we would get. And I could squeeze a little bit of a little more juice, I guess, out of this. But really, in terms of where this seems to be continuing to go, it seems to be continuing to go up. It hasn't really pushed down. It's held, it's held, it's held, so it's going up. This is that trying to win the last bit, even though it's already been won, and this is really something that I can feel is a very strong thing for me. I I want to win what was lost here, as in like it went up here before before I closed the trade down there, and there's a very strong desire to want to go after that. And the problem with it is that it's potentially expensive to do that, unless what I do is I decide very, very clearly that this is going to be a certain, there's only going to be a certain price that I'm willing to pay. And that's it. That's all it's going to be. If it comes down below that, then I'm done. And if it's not, we make a little bit of extra here. But that's all it is. Little fun and games, small little thing, squeezing the last bit of the lemon, and yeah, that's what it costs. Let's see, where are you? Okay, that's it. Another small little gander. If it works, if it works. If it doesn't, it's okay. Right now, 800, 3. Yep, some of this is wasteful if it doesn't work out. 800. Okay, enough games. That's enough. No more. 792. So now it's watching to see what actually is coming out of the signals. Is there anything that is showing up on the 15s? Maybe I'm missing something here. Oh, okay. I did miss something there. Yep. Okay, dumbass. Speaking to myself. Um, yeah, that's two big push downs on the 15s off of a not so insignificant level. So it's a potential sell, but let me see with how much risk. This is 400 points. That's going to be about that's $50 at least. $50 of risk to make 67. Eh, it's a don't have to situation, right? Yeah, you know what? So we don't, I think no point doing it. It's cost $16 to try and pursue curiosity just now, to try to see what's, what's left in the, sort of what's left to be squeezed out of the lemon, right? So two things simultaneously happening. One is a possible pushback that's happening or looking like it's happening on the 15. We look at this 15-minute chart here. Hang on, let's put that in the right place as well. So that looks like something that might be happening, but it really isn't pushing down very significantly. It hasn't really gone into this lower area here. So maybe maybe I'll just talk about the reasoning behind this, and then we'll come back to it. Okay, so the reasoning for this was very simple. It was just that there was all this like pushing down, and then it didn't go anywhere, right? So it's saying like, okay, down, saying down, but it's not going anywhere, and the overall trend is still up. So because of these two push downs that didn't go anywhere, I just went, okay, it may go the other way. So this is what I am currently working on. Maybe a small little trade here, like that. Risk also is about $10, which is okay, well within the range of this this account. I'm not gonna kid you. This is a messy trade. This is really one of those you know, when I look back and go like, okay, was that a good trade? Uh in terms of the idea behind it, I'm okay with it, but it's not one of those really high probability trades, as in like there's a great enough idea behind why it makes sense. But is it high probability? It is, to be fair, I would say no. I don't think it's one of those high probability trades. Let me just see what else I can see about this trade before I commit to it. Yeah, so here's what I'm thinking as I do this. I'm actually moving it to the next. Okay, I'm gonna move it to the next target. Okay, and why I'm doing this is this. Um, what's happened so far is that the price has tried to push down like twice into this level, and what it should have produced was kind of a push down in terms of price. But what happened instead is actually, despite the second, like this, the second push down here, what happened instead actually is the price held. So the price didn't go, it didn't come down, actually pushed up like that. So this is going to be a net. I think it's a rejection of this effort to bring the price down. And since it's against this line, what I'm being a bit cheeky about now is that this might mean that there is resistance at this level up here, this level here, but maybe not enough, since there's not enough power to bring it all the way down like that. Not enough to hold it down. So I am thinking it might be able to push through this, and if it does push through this, it will get to the next level, which I have targeted there. And it's a 10-to-1 risk reward ratio, as in like if we're successful with it, it's gonna make close to $100. So I'm not too fussed about this. It's you know, we've just had a pretty successful trade, made more than $100. Total damage right now, if this trade also fails, including the last two trades, that'll be about $26, which is still well within you know, being profitable today as well, even on target in terms of how much money should be made based on 10% a day. And in just a while, what I'm going to do is I'm waiting for this trade to mature a little bit more so that I can just move the stop loss. And if we can get it to break even, then it becomes, you know, a more or less zero risk trade with the potential to bring in a pretty nice extra few bucks to the account. And, you know, and then we can probably call it a day Uh-oh. Yeah, so this will be one of those demons that I have to kind of work on, right? It's the imagination that says you can figure out something, and whether or not it's meaningful in the grand scheme of things, it's hard to say, right? You can't know for sure. All I can say is what it currently looks like and what it behaves like, and the story, for how this trade goes. Okay. Okay, what will be really nice is that the price goes up above 33.40, and that is going to be, I think if it gets above 33.40 and just holds, then I think it forms a little bit of support there, and then I might be able to move my stop loss to break even without any incident, because right now it's just at 33.39. still detectable interest to me um, on the upside. Still see that pickup that happens, as it goes down and pushes up, goes down, pushes up. And again, voice of my mentor reminding me that even though all this is happening, this is still all in the M1 territory, the 1 minute territory, gangland territory. There still seems to be some kind of like it's a slow, steady climb almost, but no real big, like you want something really big to happen there. One six. Okay. All right. Let's see. It pushes down. I think at this point, if it shows any kind of conviction to the downside, I'm just gonna close this trade. I think there's no. Okay. Or bring this right out to the edge like this and just go like, okay, just leave it to the market to decide if I stay in or not. I think I should just decide. Okay, that's it. Enough games for a while. It's just sitting there. It's come up against the level, not really showing any real signs of movement, and the trend is so strong on the downside, like it's on the uptrend so much that I don't think there is any wisdom in trying to sell this at this point. You can't find any reason to sell it except for the level. Nothing in the market structure. So what's kind of encouraging about this in terms of where the position is, if you look where the yellow line is, it is forming a kind of a stop below that line. It's the first of maybe a sign that the market might be turning, but still no actual sign of reversal. So the temptation is to be early on it and go like, yay, I was clever and smart. But there's nothing to say that is true. So, all right. Okay, so let's have a look at this. After everything is done for this session, made a whole buck on that last trade. 793.78. Okay, so that is where I am going to call this session today. Nice good run up to the high there. We're not too sure what else is left in the market right now, so we'll just close this, and we'll catch you on the other side of this. Well, thanks very much for being my company today, and there might be another session today. It might not be. We have visitors from our town, so because of that, nice to be I guess a good host, president of the house, all that kind of stuff. Just a quick update on what's happening with the target price to be growing the market, or to be growing the account at a rate that is going to hit $1 million in 100 days. The pace is currently what you see there on the bottom right of your screen. What it means is after 11 days of growth, and today is day 11. So after today, where the account should be is at 285. That's assuming that the starting number was 100. Now there's a little bit extra that I put in along the way, which distorts this a little bit, and I want to be clear about that. So if you want to see the details of what I was talking about, what I'm talking about now, just wind to the start of this particular episode or this particular live stream, and I talk about what I did there. I don't want to repeat this here. So yeah, it's it's currently looking pretty okay. Even when I take away the money that I added in, still very much ahead of the curve. And the only thing that I'd say is a downside is if I thought about it another way, is where I would have put that money, that extra money that I put in. If I put it in right at the start, then where should this account be currently? And in that sense, it is behind the curve. So it's a mixed bag. It's good news, it's bad news. The bad news was that I fell off the wagon again yesterday in terms of what I chose to do. The good news is I managed to come back and without major damage, right? So totally the not to the point where I want to just destroy or cancel this entire project for myself, right? So it's been going okay and it's been challenging. And day 11 is actually coming into the third week of this, right? So it's all trading days. So it's always going to be only when the market's open. 4th of July is a day to consider carefully because it's not really open in the sense that once the evening comes up, there is no more trading as well. So got to remember that as I trade this. And remember, I'm trading the U.S. I'm trading gold versus U.S. dollars. So the price in the U.S. is going to be very significant, and therefore the market needs to be open for that. Okay, enough blabbering. Thank you very much for being with me, and I'll catch you on the next one.